The task force will now come to order. Good morning. Without objection, the chair is authorized to declare a recess of the committee at any time, and without objection, members of the full committee not on this task force are authorized to participate in today's hearing consistent with committee practice. Without objection, Representative Donald Payne of New Jersey may also participate in today's hearing and be recognized by the chair to question witnesses under the 5-minute rule, so long as all members of the Committee on Financial Services who are present have been recognized for that round of questioning. This hearing is entitled, "Is Cash Still King?" Reviewing the Rise of Mobile Payments. I now recognize myself for 4 minutes to give an opening statement. Welcome everyone. Good morning, and thank you for attending this hearing of the task force, and thank you for joining us today. We're here to discuss the future of payments in America. Over the past few years, we've heard anecdotal but growing evidence that retailers and consumers are moving toward a cashless society, a society where consumers don't carry cash and retailers don't accept it, instead using either plastic or mobile forms of payment. A truly cashless future is not imminent, but the rise of non-cash payments is real, and today's conversation is to help our committee better understand the implications of that rise for financial inclusion, consumer privacy, and costs to both business and consumers. New payment methods, the theory goes, speed up transactions. They give consumers more control over their money and make operating a business cheaper and safer. A consumer can swipe a card or tap their phone instead of making change at the register. That transaction is then instantaneously documented with her financial institution, automatically adding it to her ledger, which tracks spending and available balances. And the business gets to avoid the time and expense of accounting for safely storing and moving physical currency. However, the use of physical cash is still a major part of our retail economy. Research shows that cash payments make up 42% of transactions under $25 and 49% of transactions under $10. These transactions disproportionately involved disadvantaged and working-class Americans. Cashless payments typically require that consumers have access to a bank account to back their payment method. Despite improvements over the past few years, the most recent FDIC survey showed that roughly 14 million adults, 6.5% of America's households, lack bank account access. If we don't solve the problem of banking access before transitioning to a cashless society, we'll be preventing families across the country from accessing many of the basic goods and services they need to survive. Further, high-profile data breaches have been a regular fixture in the news over the past few years. This has left consumers rightly concerned about the security of their financial data. Cash transactions involving no consumer data being collected, while non-cash payments require at least some data to be exchanged. More than a quarter of all malware attacks in 2018 were directed at banks and financial organizations. As the amount of personally identifiable information stored by financial services firms grows, we'll continue to see a rise in the attacks on these groups. And while our financial institutions continue to combat these attacks, some consumers choose to manage their finances in cash. A cashless future would not give these Americans that choice. We need to continue to promote innovation in payment technology, inclusion, and security. I hope today's hearing will focus on the way we can develop our payment system to reflect these needs. The ubiquity of mobile payments is on the rise in Europe, Asia, and our competitors there will also continue to develop their own technology. We must learn from their experience and focus on meeting the needs of all our consumers here at home. So I look forward to today's discussion and to hearing from our witnesses. With that, I now recognize my friend and the new ranking member, Mr. Emmer, for an opening statement of 5 minutes.
Thank you, Mr. Chair, and thank you for convening this meeting on mobile payments. I want to take a moment to acknowledge many of the concerns that some of our witnesses will offer in their testimony, and that some of which you just shared. There are serious public policy challenges to address, and I look forward to working through them with you and everybody on this committee. However, I may differ in tone today because I'd like to look at the many positive changes and innovations we have in mobile payments. We have tremendous innovation occurring in the mobile payments space. The term mobile payments is so broad that it even fails to capture all the improvements in ease and convenience of payment, as well as the growing methods of payment. We can't be afraid of innovation and change. Ignoring or even suppressing innovation will not make it go away. Innovation can actually be a key driver in lowering costs to individuals and creating new ways to enhance consumer protection. We have so many ways to pay today using our digital devices. This past holiday season, Americans spent more than $50 billion just using their phones. Apple Pay, Venmo, Zelle, Square Cash, and even Bitcoin are now household names. Some of the most successful mobile payment applications include Uber and Lyft. Or I can open my favorite merchant mobile app, select items to purchase, see what coupons and rewards are available, and in one click, pay for my items. This hearing is titled, "Is Cash Still King?" While we have differing opinions among our witnesses and among task force members, is this really the right question to ask? Regardless of the dominant form of payments, shouldn't we be asking, how can we make access to commerce easier and more fair? How do we ensure financial inclusion in an evolving world? How can new forms of payment facilitate access to services and uplift struggling Americans? Cash is undoubtedly still with us, and it will remain that way for the foreseeable future. But this is the Financial Technology Task Force, and I hope we spend some time trying to learn about and better understand the changes taking place in our society. I hope we discuss ways that mobile payments can include everyone and enable access to capital and financial services in ways that were previously impossible. I'd also like to acknowledge the former ranking member, French Hill, for his efforts in this space. Representative Hill led a letter to the Federal Reserve supporting further research into the concept of a digital dollar. This concept could both speed up transactions and provide convenience for consumers, but it can also extend access to those previously excluded and help bring more people into our increasingly digital world. In advance, I thank the witnesses for their time and insights on these topics, and I look forward to the discussion today, and I yield back.
The gentleman yields. The chair now recognizes Mr. Scott from Georgia for 1 minute.
Thank you very much. Chairman Lynch, I look forward to today's hearing on financial inclusion, how we can work with that, on how payments innovation can improve access and convenience for underbanked customers, also security in our financial system, and how an increase in online transactions impact transparency and fraud. And also, Mr. Chairman, our task force has been critically engaged in the ways of cutting-edge technology, in the ways cutting-edge technology can benefit consumers and small businesses. I look forward to our distinguished panelists, and thank you, Mr. Chairman.
The gentleman yields. So today we welcome the testimony of a distinguished and accomplished panel of witnesses. Ms. Diana Del Rio, the co-executive director of the New Economy Project, an organization built to support community-controlled development and produce safe and healthy communities. Mr. Usman Ahmed, head of global public policy at PayPal, a leading company in digital payments technology and owner of the peer-to-peer payments company Venmo, that I use to continually send money to my daughter in college at Elon University in North Carolina. She appreciates your service. Mr. Aaron Klein, fellow in economic studies and policy director for the Center on Regulation and Markets at the Brookings Institution. Mr. Klein has also served as Deputy Assistant Secretary for Economic Policy at the Treasury Department and as the Chief Economist for the Senate Banking Committee. Ms. Christina Tetreault, is that right? Tetreault?
Tetreault, thank you.
Tetreault, okay, thank you. Ms. Christina Tetreault, Senior Policy Counsel at Consumer Reports, a nonprofit consisting of policy and legal experts that advocate for pro-consumer policies and financial services. And Ms. Kim Ford, Executive Director of the U.S. Faster Payments Council, an industry trade organization dedicated to modernizing the U.S. payment system. Thank you all for being here and for helping the committee with its work. Witnesses are reminded that your oral testimony will be limited to 5 minutes, so So without objection, your written statements will be made part of the record. Ms. Del Rio, you are now recognized for 5 minutes to give an oral presentation of your testimony.
Thank you, Chairman Lynch and Ranking Member Emmer, and members of the Task Force on Financial Technology. Thank you for the invitation to testify at today's hearing. I'm here on behalf of New Economy Project, an economic justice center in New York City that for more than 25 years has worked with low-income New Yorkers and community-based organizations to challenge systemic discrimination in our financial system and to advance fair lending, financial inclusion, and reinvestment as a matter of racial justice, and to ensure the tools are available for equitable neighborhood development. I'm pleased to share our perspectives on some of the issues being discussed at today's hearing, focusing on bank redlining and continued impediments to banking access for too many Americans and people, as well as the growth of cashless businesses and disparities in financial services access as they play out in low-income neighborhoods and communities of color. I've attached to my testimony several maps that just paint a bit of the landscape in New York City and show the vast disparities in terms of where bank branches even locate based on the racial composition of neighborhoods. And you'll see that on the maps, they show that there's fewer than one bank branch per 10,000 residents in communities that are predominantly Black or Latino, and that compares to 3.5 branches in predominantly white neighborhoods. It's just one indicator that shows the different kind of financial services landscape that people encounter in their daily lives, not only in New York City, but throughout the country, where those patterns play out consistently. I want to emphasize a few things in my verbal testimony. One is that the issues addressed in today's hearing, we believe, are systemic in nature and deeply entrenched. They call for bold systemic solutions, including strong regulation. Too often, discussions about financial access disparities, including the use of cash versus credit or debit, focus on choices or behaviors of individuals or on the need to design so-called alternative products, rather than on addressing the continued structural barriers that block millions of people, including poor people, immigrants, low-wage workers, and many others, from accessing mainstream and strongly regulated institutions, products, and systems. As this committee knows, there are multiple impediments, and some of them include the high cost of maintaining bank accounts, persistent redlining, as I mentioned, and prohibitive identification requirements, which all create real barriers to entry for millions of people. Through our legal assistance hotline, which assists thousands of people every year, we have in fact seen a very clear and growing pattern of mainstream banks actually pushing low-income people out of the banking system and out of regulated services in myriad ways. One example is the way that banks typically will close people's accounts if they experience fraud, or at the end of a month if they've incurred high and hidden overdraft fees and are unable to pay those overdraft fees back, which can easily total in the hundreds of dollars. Not only do banks close people's accounts in those instances, but they report those customers' information to check systems and other consumer reporting databases shared by the banks, and it effectively blacklists people from opening accounts elsewhere. And so the conversation about access to finance and how that can facilitate mobile payments needs to look at some of the continued predatory practices in our system. I want to point out a few things. So one is that while we believe that eliminating barriers to access are important, at the same time, we have to recognize that financial products and technology are not a solution to these deeply systemic problems. They aren't solving poverty or income inequality. We see too often that we hear industry and policymakers tout different products and services as being the solution to deeply entrenched problems that require bolder solutions. We also believe that we must challenge the rhetoric and the sort of alleged benefits around financial innovation and fintech, which in the experience of low-income people and communities that we work with just simply fail to match reality too often. For decades, companies have invoked innovation as a smokescreen, frankly, to evade strong regulation and to peddle inferior, high-cost, or even outright predatory products, from subprime lending to payday loans to fee-riddled prepaid debit cards and payroll cards that are often marketed to low-wage workers or that employers force workers to receive their payments on, essentially transferring the cost of managing payroll from the employer to the low-wage worker. And I just want to emphasize that the term fintech obviously is very broad and is used in many ways. It can refer to a range of companies and technologies. We recognize that appropriate and safe technology can, of course, benefit people, but too often we see these companies claiming to be eliminating banking deserts and supporting and empowering communities when they're, in fact, perpetuating segregation in our banking system. One example is how fintech companies in New York are routinely seeking to circumvent strong state consumer protection laws, including our state usury laws, which have effectively kept out payday and other exploitative, usurious lending from our state. The administration's efforts currently to exempt fintech companies from critical consumer protection rules only exacerbates these serious risks. I thank you so much for your time, and I look forward to addressing the other topics during the Q&A.
Thank you, Ms. Del Rio. Mr. Ahmed, you're now recognized for 5 minutes.
Thank you. Chairman Lynch, Ranking Member Emmer, Chairwoman Waters, Ranking Member McHenry, and members of the task force. I would like to thank you all for giving PayPal the opportunity to testify today on the important topic of mobile payments. Since 1998, PayPal has been at the forefront of mobile payments. PayPal operates an open, secure, and technology-agnostic digital payments platform that gives our over 300 million active account holders the confidence to connect and transact in new and powerful ways, whether they are online, in-app, or in person. Through a combination of technological innovation and strategic partnerships, PayPal creates better ways to manage and move money. We offer people and businesses choice and flexibility when they send and receive payments. Whether sending and receiving money with friends and family through apps like PayPal, Venmo, and Zoom, or engaging in e-commerce, more and more people are using their smartphones to make purchases, receive payments, and manage their accounts. Our technology is giving more people and businesses access to the global market and the ability to use financial services tailored to their specific needs. The mobile phone has transformed nearly every aspect of our lives. We use it to communicate with friends and family, watch our favorite shows, order a cab, change the temperature at home, and engage in payments. The growth of smartphones over the past decade has been incredible. In 2011, only 35% of Americans had access to a smartphone. The percentage grew to 81% by 2019. At PayPal, we have witnessed how the rise of mobile devices has transformed payments. In Q4 of 2019, 44% of the $199 billion of total payment volume we processed was made on a mobile device. The advancement of mobile payments has important implications for unbanked, underbanked, and financially unhealthy individuals and communities. For example, giving people access to money instantly via a mobile device can help in reducing fees and late payments. Sending remittances using a mobile device is about half the cost of a traditional remittance and can save over an hour of time for both the sender and the receiver. Mobile payments can also provide a baseline for credit underwriting, which can enable consumer finance during cash flow challenges. Mobile payments can also benefit small businesses due to the lower costs of acceptance, as well as payments data being leveraged to help fill the gap in small business working capital, in particular for women and minority-owned businesses. Security has been front and center throughout the development of mobile payments, leading to the adoption of tokenization technology, which reduces the number of entities that have access to sensitive financial data. PayPal is a pioneer of tokenization technology. Tokenization substitutes sensitive financial information with a series of non-sensitive numbers that confirm to a business that a payment is authentic, but minimizes the likelihood of data breaches and reduces fraud. Mobile payments information is sensitive, and PayPal leverages payments data for fraud reduction and service improvement. Cash is a ubiquitous form of payment, but while it may appear costless to transfer, there are costs associated with cash. Cash is deeply implicated in tax evasion, which costs the U.S. federal government some $500 billion a year in revenue. When Mexican drug lord El Chapo was arrested, there was more than $200 million in cash found on the premises, and the global drug trade is estimated at $600 billion. And finally, 20% of unbanked consumers report having cash lost or stolen. In a study of low-income Los Angeles area households, the finding was that the average unbanked consumer lost the equivalent of nearly 2 weeks of household expenses when cash was lost or stolen. Mobile payments presents a tremendous opportunity to reduce many of these costs associated with cash. Now, while we don't predict the death of cash in the next decade or two, and we believe that consumers should have choice in what payments options they choose, at PayPal, we are working diligently to make sure that the value proposition of digital payments vastly exceeds the value proposition of cash for every member of society. Thank you again for the opportunity to address the task force on this important and timely topic, and I look forward to answering any questions.
Thank you, Mr. Ahmed. Mr. Klein, you're now recognized for 5 minutes.
Thank you, Chair Lynch, Ranking Member Emmer, Chair Waters, Ranking Member McHenry, members of the task force, for the opportunity to testify on the critically important issue of the future of cash and the rise of digital wallets. Let me start by answering the question the hearing poses. Yes, cash is still king. In fact, cash is used by a diverse set of people who defy traditional political or geographic boundaries. False narratives abound that cash is dying, or cashless societies around the future, or that millennials don't use cash. In fact, millennials and their grandparents have cash in common. Both generations use it more than those between ages 30 and 60. In a sample of mostly small business transactions, Iowa and Wisconsin, two of the more cash-intensive states, have a lot more in common with the Bronx and Staten Island, while Utah and Virginia, two of the more card-intensive states, are much more similar to Brooklyn and Manhattan. Nationally, racial minorities and rural Americans both use cash more frequently, and has been stated cash is the most common way people pay for things under $25. While cash is still king, there's no denying that an increasingly large number of goods and services are moving on to digital payment platforms that do not accept cash. As the economy digitizes, those without access to low-cost, reliable digital payments are increasingly unable to participate and share in the benefits. Prior concerns about a digital divide were centered around the questions of access. Smartphones have successfully bridged this divide. However, online access alone is insufficient. Without a means to purchase the goods or services being offered, the benefits of the app, gig, or online economy fail to convey. Access to digital payments has become the new digital divide. Online and app-based goods and services lower costs from everything from ordering groceries to hailing a cab. However, the economics of many digital services simply assume users will always have funds to cover recurring or periodic expenses and expect the ability to tap into a consumer's bank account to get paid. Given the high cost of overdraft fees, growing income volatility, our nation's anachronistically slow payment system, the reality for people living paycheck to paycheck is a far more expensive system than for those on the other side of the divide. For consumers to truly benefit from the digital economy, cheap and reliable digital payments are necessary. Yet our existing system provides them freely to those with money and charges a lot to those without. It may require government policy and resources and strong rules to fix this problem. A corollary to the policy that businesses continue to accept cash is that consumers have access to digital payments, and that needs to be facilitated. My written testimony goes into significant detail regarding the high and often hidden costs of existing banking products like overdraft fees that create an effectively different cost structure for people living paycheck to paycheck. It highlights multiple policies to solve some of these problems and reduce the demand for expensive ways to access cash like check cashing. The key is to require immediate funds availability for consumers, which most of the rest of the world developed decades ago through real-time payments. Waiting for the Federal Reserve to follow through on its announcement to build the system sometime this decade is not enough. Policymakers could solve this problem today if they wanted to by regulation or legislation. In fact, tomorrow is the 31st. A lot of people will get paid that day and will struggle to come up with the amount of money available in their bank account to meet their payments on the first of the month the next day. I want to conclude by noting that America once led the world in payment technology. 50 years ago, America pioneered the new payment technology that would come to dominate the world, magnetic stripe plastic cards. But technology alone was not enough. It required robust consumer protection legislation from Congress, such as the Electronic Funds Transfer Act, to successfully create an environment where cards flourished. Today, China has leapfrogged cards. China's new system is built on digital wallets, QR codes, and runs through their own big tech firms. China's system largely disintermediates banks and creates an alternative payment ecosystem with different incentives between merchants, consumers, and payment system providers. It challenges the long-standing placement of payments on the side of banking as opposed to commerce. China's system is unlikely to catch on in America precisely because it is more efficient. Because it does not take large sums of money from merchants at the register, it will not be able to compete with the growing high-end credit cards that come to line America's wealthy with thousands of tax-free dollars in rewards. Ironically, the inefficiency in America's payment system that has turned it into a reverse Robin Hood that contributes to income inequality will block the adoption of alternative technology. This committee is wise to consider the rise of mobile wallets, and policymakers should devote more time and attention and resources to figure out how to create a more fair, efficient, and inclusive payment system. I thank the chair and ranking member and rest of the task force and look forward to your questions.
Thank you, Mr. Klein. Ms. Tatro, you're now recognized for 5 minutes.
Chairwoman Waters, Ranking Member McHenry, Chairman Lynch, Ranking Member Emmer, and members of the Financial Technology Task Force, thank you for the opportunity to be here today. I am Christina Tatro, Senior Policy Counsel for Consumer Reports. CR is an expert, independent, nonprofit organization whose mission is to work for a fair, safe, and just marketplace for all. My CR colleague, Suzanne Martindale, testified before this committee in 2012 regarding the future of money and the rise of mobile payments. She noted that consumer privacy concerns inhibited mobile payments adoption, and that fragmentation in payments law creates uncertainty for consumers. 8 years later, I will make these same points today. American adoption of mobile payments continues to lag that of other countries. Americans still love cash, and as compared to mobile, they love cards. It's important to note that mobile is a platform and not a new payments type. Beneath the modern veneer of mobile payments is mostly technology built in the early 1970s. New payments rails, including faster payments and cryptocurrency, are, in the case of faster payments, or should be, in the case of cryptocurrency, covered by existing laws. Unfortunately, payments law is an irrational mess. Under current law, credit card holders have the strongest protections. Debit card, bank transfer, and prepaid accounts have weaker protections. Gift cards and direct-to-carrier billing have almost none. Congress can fix the mess in payments law, making every way safe to pay. It can do this by establishing a strong floor of uniform protections for all non-cash, non-check payments. Now, when it comes to mobile payments, unfortunately, consumers do not understand their rights and obligations. When we ask a focus group of mobile payments users what they thought would happen if something went wrong with a payment, they uniformly said that they expected that the company whose name was on the app or wallet would fix the problem and make them whole. This is not necessarily the case. In some instances, users may in fact be obligated to contact their bank or card issuer for help. Other problems fall outside the scope of current law. For example, when a consumer is tricked into sending money to a scammer, they will find that these transactions have essentially the same level of protection as cash. Now, many claims have been made about how mobile will increase financial inclusion. The reality is quite different. Americans without checking and savings accounts are less likely than bank consumers to use mobile payments and are far more cash reliant than other Americans. Unbanked consumers are more likely to suspend or cancel their cell service because of the cost of maintaining coverage, making regular use of mobile financial services nearly impossible. No app fixes the structural issues that lock out too many Americans. Cryptocurrency has also been proposed as a fix for financial inclusion. If the legal mess in traditional payments is bad, the legal mess in cryptocurrency is worse. The few consumer protections that cryptocurrency payments have are largely found in state money transmitter laws and are seriously lacking. Cryptocurrency, and for that matter, any emerging financial service, should not be tested on consumers with the least cushion in their financial lives. The best way to ensure consumer access to faster and safer electronic payments is to support the Federal Reserve's proposal to build the FedNow faster payment system, and not by empowering untested, unregulated corporate schemes such as Facebook's Libra. There is another shadow over mobile payments. The current protections for mobile payments made with stored value, for example, the money held in Venmo accounts, are threatened by the PayPal lawsuit seeking to invalidate the CFPB's prepaid rule. Before the rule, consumers had to rely on the inadequate protections provided by state money transmitter laws. Billions of dollars and millions of consumer accounts are at risk if this rule is invalidated. Privacy concerns exist alongside legal concerns in mobile payments. So while mobile payments and even some additional financial services are free to consumers, users are not the customers of these services. They are, in fact, the product. The potential for users' information to be weaponized against them is particularly acute when payments are combined with platforms. We need strong privacy legislation that creates a federal floor of protections, a law that requires data minimization, clear information about provider practices, and strong data security standards. This law must also have vigorous enforcement tools and tools to ensure accountability. I thank you for the opportunity to be here today, and I look forward to your questions.
Thank you, Ms. Tatro. Ms. Ford, you're now recognized for 5 minutes.
Good morning, Chairman Lynch, Ranking Member Emmer, and distinguished members of the task force. Thank you for the invitation to be here today. My name is Kim Ford, and I am Executive Director of the U.S. Faster Payments Council. The FPC is a membership organization that is leading the industry effort to modernize the U.S. payment system. We were formed from the work of the Federal Reserve's Faster Payments Task Force, which brought the industry together to start to figure out how to make the U.S. payment system faster, more secure, and more efficient. I'm grateful for the opportunity to be with you today as we examine consumers' payment preferences and look to what the future may hold for the U.S. payment system as a result. As you know, the payments landscape is in the midst of unprecedented change. When I entered this industry in 2004, the headline at that time was that checks were just starting to lose ground to debit and credit cards. And now we're talking about things like mobile payments, biometrics, machine learning, artificial intelligence, cryptocurrency, and more. Clearly, we have transitioned in this country from an environment dominated by paper checks and cash to one dominated by electronic payments. And we are seeing that cash is being used less and less for some of the major payment categories it once led. For example, historically, cash has been used for low-value payments below $25, but we are seeing card use grow in this area as well. And as we think about why that is, two themes come across most clearly: consumers' desire for convenience and consumers' desire for security. Take electronic payment cards. They're accepted at retailers across the globe. They enable convenient tracking of transactions, provide budgeting options, and provide consumers with protections against loss and fraud. And while cash may also be convenient, easy to carry, and widely accepted, it can be easily lost or stolen, and there are no measures in place for consumers to recoup such funds. For these reasons, among others, electronic payments have climbed the ranks to become a preferred payment option for U.S. consumers. Moreover, as Americans incorporate their smartphones into so many aspects of their lives, they also expect that on-demand functionality to extend to how they transact with their friends, family, businesses, employers, and even the government. This has translated to an increase in the use of smartphones for things like internet banking, e-commerce transactions, and the use of mobile payment apps. One study by payment provider TSYS reported that over the last 3 years of their consumer payment research, survey respondents consistently rated the most attractive features of mobile payments as, 1, the ability to immediately stop a fraudulent transaction, 2, the ability to instantly view their transactions, and 3, the ability to use their phone to turn their payment card on or off to prevent unauthorized usage. These findings underscore so many Americans' increasing reliance on electronic payments to solve for convenience and added security. But of course, the popularity of mobile phones and access to the internet are not enough to increase financial inclusion. And certainly, it is appropriate to ensure that people can actually benefit from digital financial services. And this, of course, requires a well-developed payment system, reliable and accessible infrastructure, and a robust regulatory framework with consumer protection safeguards. And while we haven't completely solved the access issue in the U.S., financial inclusion is getting better, due in part to new types of financial services that are accessed through mobile phones and the internet. But challenging our system to be better isn't limited to plastic cards and mobile phones. At the FPC, we believe that the next evolution of our payment system is a more real-time, safe, and efficient system that anyone can access at any time, anyhow, and anywhere. We believe that faster payments have the potential to build on the benefits of current electronic payment mechanisms and further improve money management, remove costly paper processes, minimize settlement risk, and encourage global competitiveness. Our members believe it so much that they created an organization to bring all the payment industry stakeholder segments together to identify barriers to faster payments adoption and then work shoulder to shoulder to solve those problems. For example, we are examining the regulatory landscape for faster payments, studying fraud best practices and trends, promoting transparency for consumer and business end users, assessing directory models, and helping our members understand how to develop and implement a faster payment strategy. Yes, we support electronic payments, but we also support an environment in which payment choice is preserved, whether that be paying with cash, writing a check, sending a wire or ACH, or using a credit, debit, or prepaid card. I'm also proud of the fact that we are demonstrating that it is possible to get a wildly diverse group of industry stakeholders together, representing consumer groups, merchants, tech providers, financial institutions, and more, to tackle complex problems in a fair, inclusive, and transparent manner with an end goal on which we all agree, which is driving universal access to a faster payment system that delivers a high-quality and secure user experience for all. Thank you for the opportunity to present to you, and I look forward to answering your questions.
Thank you, Ms. Ford. I now yield myself 5 minutes for questions. Mr. Klein, you illustrate a good point where if you look at young people and their consumer preferences, you know, our two girls, I don't think have ever been in a bank, except for maybe getting traveler's checks or something like that, probably, you know, less than 5 times in their lifetime, you know, compared to how I grew up where payday, you'd go down there and stand in line with everybody else. So this is a trend that is really overtaking us. And it's being driven by consumer preference, right? It's not I don't think it's necessarily some cabal or, you know, diabolical plan. I think it's just easier, and people want to do it. The problem is that not everybody has that opportunity. You've had an interesting you know, background in terms of looking at international payment systems and things like that. Are there models out there that would sort of address what we're trying to get at? We know it's much cheaper and in many ways more efficient and safer in some instances. Are there systems out there that do a better job than we have right now in terms of you know, the payment systems that are out there?
Yeah, Chairman Lynch, it pains me to say this, but China's system is much more efficient, much faster, and has reached a level of universal adoption that is somewhat mind-boggling. I mean, you have 2 services that started less than 5 years ago, and they each have 1 billion monthly users.
Yeah.
And they were able to do it in part. One of the fascinating things about the Chinese experience is this is a country that had, by some estimates, 7 million debit cards, but only 20 million to 40 million card readers. You could not take a card. Go around China and try and do something with your magnetic stripe card, and they look at you like you're from a century ago.
Yeah.
It's all on codes and digital wallets. Now, there are problems with the Chinese system. I'm not advocating that we move there, particularly because of some of the commercial concerns involved in bringing the banking system, the payment system outside of banking. And our legal and regulatory framework completely assumes that payments are part of banking system. As Ms. Tetro's testimony points out, everything is tied to this being in banking. But when you legally look at the cleft between banking and commerce in the United States, there's nothing that ties payments onto the banking side.
Yeah. Thank you. And Ms. Tetro, I want to ask you, all right, we raised the China model. So right now, if banking goes the way of the internet, where they just collect all our information, and not only what they need to, but everything they can get their hands on, and then they, you know, screen scraping and selling personal data, personal financial data. I know that you've written extensively on privacy. Do we need a new architecture, you know, with respect to financial data than we've I mean, we've given it away in terms of, you know, our personal data on the information side, on the internet side. Do we need a new architecture to be more covetous and protective of our financial data, or can we overlay this on the existing system?
I think there are two solutions to the problem. The first is provider practices, so enabling tools for consumers to be able to really see what information is being collected and then make choices. And there are efforts out there. Financial Data Exchange, I know they were here before the committee previously, and they're creating those tools, and those tools are very helpful, and we're supportive of that effort. The other aspect, though, is a strong federal privacy floor, so that actually includes curbs on data collection and sharing. And GLBA is often touted as a privacy law, but it is not, in fact, privacy protective in those ways. And so it's time for a new approach.
Great, thank you. Mr. Ahmed, speaking for Venmo and for the industry in terms of what you have come up with, are there mechanisms or models that you identify that might address the concerns that we've raised here?
Certainly, I want to acknowledge something Mr. Klein raised about merchant acceptance. So in China, a lot of the reason why there's been success there in moving to mobile payments was getting all of the businesses to accept these small QR codes, and agree with Mr. Klein that maybe it's that model, maybe it's something else, but I just want to stress that when we're talking about consumer adoption, low and moderate income consumers, rural consumers, if the places where they go don't accept mobile payments, then they won't switch. It's a chicken and egg problem, and we also have to include a focus on the merchant side of the equation.
That's great. Thank you very much. My time has expired. I now recognize the gentleman from Minnesota, our ranking member, Mr. Emmer, for 5 minutes.
Thank you, Mr. Chair, and thank you to the committee for your testimony and being here today. It's interesting, more than one of you this morning was critical in different respects to the promise that the innovation, new technologies provides. In fact, I think one of you even referred to the rhetoric that gets used about how this is going to benefit consumers and society. And I could focus on several, but in the short time, Ms. Tetro, I think that's the way you say it, I was particularly concerned by some provisions in your written testimony that you've submitted that criticize cryptocurrency. Although you only mention Libra, which is not in itself a cryptocurrency, I would hope that you've more fully explored these innovations, or if you haven't, that you will be, and the opportunities that they provide to both build a financial future for individuals, but also to empower individuals to control the value of their own assets separate from government control. Have you done any of that?
So we have looked at cryptocurrency, and I made remarks almost, 6 or 7 years ago that the original promise of cryptocurrency was returning power to consumers. And what in fact has happened in the intervening years is that what we've seen is an infrastructure that's built up that's largely acting as an intermediary, that consumers are not truly empowered to quote unquote be their own bank. And so and that these intermediaries are often under-regulated, under-supervised, that there aren't clear rules of the road. And so the promise of cryptocurrency in many ways has been lost. And so there are any number of needs, not the least of which is to fold them into payments law in a more rational way and to rationalize payments law overall.
All right. Well, and as defined by you or someone else, what is rational? Seriously, it's your definition of what's rational, because there's a whole environment out there of brilliant, genius young people who are coming up with new ways to transfer value every single day. And I worry that we're gonna crush that entrepreneurial spirit and that advancement. Obviously, you and I, we've heard of Bitcoin, we've heard of Ethereum. You familiar with XRP and the efforts of Ripple?
With the distributed ledger technology for their payments?
Yep.
Yes.
And you're familiar with EOS?
No.
What about privacy coins like Monero or Zcash?
So I had a footnote that, if I understood the aim of this hearing, that it was, that I was not going to approach the privacy concerns. There are any number of different privacy technologies around cryptocurrencies. Some are concerning, some are very promising, and that it really is very item-specific. So I don't have a lot to say on that, only that you're right, there is definitely, I mean, I agree with you that there is definitely some interesting things going on there.
I mean, how about ZeroX or Algorand? What about Stellar, which is facilitating cross-border transfers? Are you familiar with that one?
No.
So, I mean, I could keep going through these, but it's amazing things that are happening out there, and it concerns me when we're talking about mobile payment systems, and we draw in any one of you cryptocurrency or these new innovations, which and suggest that it's a negative because. By the way, major companies like IBM are doing work on this too. The Plastic Bank is a pilot program that has proven to be successful in Haiti, where a digital asset is provided in return for cleaning up plastic waste. I mean, they're amazing things. Are you familiar with M-Pesa?
Yes.
All right. I mean, we should talk because somebody used the term rhetoric. M stands for mobile. Pesa is Swahili for money. This is a mobile phone-based money transfer, financing, and microfinancing service launched in 2007 by Vodafone, the largest mobile network operator in Kenya and Tanzania. By 2012, it had 17 million accounts. This system service has been credited with giving millions of people access to the formal financial system and for reducing crime in otherwise largely based cash-based society. Again, I think we have to take a deeper look at this and learn more about these innovations. It's not black and white. And the real interesting developments come when you start to get into the details and differences in the technology. So I'd appreciate it as we talk about mobile payments and move forward if we could be more inclusive about the technologies instead of fearing something that we don't know enough about. Thank you.
The gentleman yields. The chair now recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you very much, Chairman. Ladies and gentlemen, first let me say that each of your testimonies were very, very informative and opened our eyes, I'm sure, to much of what we were only dimly aware. However, this whole issue is sort of bringing us into the new frontier for our entire financial services industry. It's very important. I've been spending quite a bit of my time dealing with an issue that I want to present to this committee, which is, are we doing enough to make sure we address this fundamental problem? According to the most recent statistics, there are 58 million unbanked and underbanked folks out there. But what is most startling, most of those are unbanked, meaning they don't have a savings account, not mama, not daddy, sister, brother. Nobody in the household has a savings account or a checking account. So, Mr. Ahmed, let me start with you. How do we address this to make sure that we are providing the transparency, the affordability, the convenience for these consumers, but access to electronic payment systems have traditionally required a savings account or a checking account, which presents challenges here. How are you all at PayPal, which has certainly been a forerunner in all of this, addressing this issue to make sure we bring everybody along with us as we make this technology jump?
Sure. Thank you for the question, Mr. Scott. So I think it has to be done in partnership. So PayPal's a technology company, but there are all sorts of entities that are on the ground in the communities, in the places where you're talking about. Think of retailers, maybe a 7-Eleven, a Walmart. Think of a remittance provider like a RIA, where we can partner with those entities, enable cash to be offered up at the point of sale, and then digitize it on the back end. So I think it's really in getting on the ground in the communities, in the places where these people are, and providing them a service, as I mentioned in my testimony, that is actually more valuable than just a cash-based service. Because until and unless we create that value proposition that really can respond to the challenges and the issues that they're facing, then there won't be a reason to move into this ecosystem.
Are you confident that we will not leave these unbanked and underbanked folks behind?
I would say at PayPal, we're making very, very strong efforts to do that, and I think it's going to be about everyone in this room working together, public-private partnership, and intentionality behind the efforts in order to prevent that from happening.
Do you think there are costs associated with accepting cash for small businesses?
Certainly, and I think a typical small business, when they're accepting cash, they assume that it's a costless transaction, but actually when it comes to things like, simple things like accounting for that cash, doing payouts to employees, doing payouts to vendors, providing security for the cash, there are actually a number of costs associated with that. My mom was a small business owner, and I remember the challenges of trying to account for everything. And so digital kind of transactions can really help to simplify a lot of those processes and reduce some of those transaction costs.
Ms. Ford, you've been working very much in this area throughout your career. What are your thoughts on this?
I mean, I think that we have to recognize that obviously there are limitations that financial institutions have because there is a regulatory framework in which they have to operate. But I think when we look at the experience in the US as well as globally, I think that is one reason we've seen the rise of non-bank fintechs who are saying, okay, we've got this great technology out there. We want to try to be some sort of a link to consumers. So if we can be that intermediary and try to, get somebody who is unbanked to be more comfortable, maybe it starts with a gift card or some sort of some sort of prepaid card they can load with cash, but then that gets them slowly into the financial services system and then can become banked. That's obviously where we want to move things. So I think that, we're making progress, but I agree with you. I mean, the unbanked issue is very real. It's one reason at the FPC we have a whole consumer segment who are constantly saying, how are we going to make this as inclusive as possible? But I do think we have to acknowledge that financial institutions are constrained by certain regulations as well.
Thank you very much. Thank you, Chairman.
Gentleman yields. The chair now recognizes the gentleman from Missouri, Mr. Lukemeyer, for 5 minutes.
Thank you, Mr. Chairman. Mr. Klein, you made my day today when you said a while ago that the seniors and the millennials have something in common with regard to cash. First time I have anything in common with millennials. Thank you.
You're welcome.
One of the attributes, one of the benefits, I guess, of being a little older and been through the mill here a little bit is the fact I remember when credit cards came out. Yes, I'm that old. Moses and I, we came down the mountain together. And I remember then everybody said, well, it's the end of the checks. No more checks. Credit cards are going to take over. Checks are gone. But as today, the latest Federal Reserve report from the Bank of St. Louis, Federal Reserve Bank of St. Louis says we've actually got twice as much cash in the system now as we had 10 years ago. We still have as many checks issued today as we did 40 years ago, whenever the credit cards, 50 years ago, when credit cards came out. And now we have all different sorts of payment systems out there. If I was turning a new business today, I would have all of these kinds of payments because it enhances the ability of myself to be a new business, to transact business, to attract everybody in, enable them to make the transaction. So when people get exercised here about this is going to happen, that's going to happen, just everybody take a deep breath, step back. This is just an alternative, another way of doing this. And so I come from the point of view of, okay, how can we do this in a safe fashion? I think Ms. Ford made some really good closing comments in her testimony a minute ago. And I think Ms. Tetro made some comments with regards to Libra and cryptocurrencies. And, that quite frankly is now the preferred way of money laundering with cryptocurrencies for all of our nefarious folks out there. To me, I look at the security of the data and how you can improve the convenience for people. and how you can minimize the use of enabling people to do fraud and launder money. So to me, this is where we need to be focusing to enhance the ability of the mobile phones and the different types of payment transactions. So, Ms. Ford, I'd like for you to elaborate just a little bit on your final comments about how we can make a faster system, yet a safer system, and be more inclusive.
Absolutely. So I think, again, one of the elements that is driving this whole conversation around faster payments, besides the fact that a lot of other countries have implemented faster payment systems, is that we have better technology out there. And I think, as we look to, for instance, the experience in the card space as it relates to security, we've seen some great innovations around encryption and tokenization, where the idea is that I think the mindset used to be, how do we protect our sensitive information from being subject to unauthorized usage. Now I think that we know how sophisticated the criminals are, so the conversation has shifted to how do we devalue the data, because it's likely that there's going to be some sort of a breach somewhere, right? So I think those are the kinds of things that we're looking at in the context of faster payments as well, which is how can we continue to leverage these types of innovations? And for instance, if you look at fraud prevention practices historically in payments, a lot of that was very manual processes, individuals actually sitting in front of a monitor trying to look at these transactions. And now we can think about, okay, how can we leverage artificial intelligence, for instance, or machine learning? Obviously, there can be biases in those as well, but I think there are some opportunities to be able to leverage this technology to add security components.
Thank you for that. Ms. Del Rio, you talked a little bit about some of the concerns that folks who can't work with a bank because of the costs that are involved there, and they have to go to a strictly cash way of living. Have you found that because the banks charge for cashing checks or for having an account or for a minimum amount that you have to have in there before you get free checking, is that the kind of problems that you see?
Sure, yeah, those are some examples. And just to clarify, not only are people being pushed out of the banking system and being forced to rely on cash, but then in the vacuum that banks leave in these neighborhoods is where you see the pawn shops, rent-to-own stores.
Okay, why do you
so
think
on.
why do you think that the banks are having to charge those fees?
Well, I think that the banks have made pretty clear, well, first of all, there's been a wave of deregulation of the banks, and there's a weakening of the Consumer Financial Protection Bureau and other rules that govern banks. We think the banks have made pretty clear they're not very interested in serving low-income people. We see that in myriad ways. And yes, the minimum balances that banks require in order to avoid fees is one impediment. Identification requirements that actually go far beyond what regulations require are another impediment for millions of Americans.
Have you talked to any banks and asked them what it costs to maintain an account?
Absolutely, and I'm actually the board chair of a community-based credit union, and so we're very aware of the costs of implementing banking.
It's difficult to give a service for free unless you can find another way to subsidize that within your institution.
Right. I think that one of the problems is that in terms of checking accounts, it's low-income people through overdraft fees that are subsidizing the free checking of more affluent people. And so, yes, we believe that there are costs and there's ways to manage the costs, but right now those costs are not being borne fairly among banks' customers. And you can look at who pays overdraft fees. It's a very small percentage of people, and it's the lower income segment.
Those are loans, by the way. I thank you very much.
The gentleman yields. The chair now recognizes the gentlewoman from Iowa, Ms. Axney, for 5 minutes.
Thank you, Chairman. Thank you to the witnesses for being here today. Really appreciate it. Obviously, we're hearing a lot of discussion about the benefits that mobile payments can provide. As the co-owner with my husband of a digital design firm who uses PayPal literally every day, nationally and internationally for payments, I'm certainly familiar with the benefits. And I think there's absolutely so much opportunity to help people with better services, and hopefully we'll see more of that down the road. However, I'm concerned that we're leaving some people behind. We've been talking about it today. With smartphone and internet access, people can't use these wonderful services, as we well know. And the FCC estimates that approximately 20 million Americans lack broadband service, and I certainly know that in the state of Iowa. Also, due to the issues with mapping, we know that that number is probably far greater than just 20 million. In fact, Microsoft estimated that 150 million Americans aren't actually using the internet at broadband speeds, which they would need to be able to perform these functions. And a lot of these people are, unfortunately, in my district. That kind of difficulty is why Iowa is one of the top 5 states, as Mr. Klein pointed out, in terms of use of cash. So, Mr. Klein, I'm worried that moving too quickly to mobile payments will risk exacerbating what we're already seeing with rural communities absolutely being left behind. I'm trying to fight to keep them getting the opportunities that we need. Are you seeing that moving to mobile too quickly and risking the opportunities for rural communities is something that your research shows to be a problem?
Yes, Congresswoman. It's very important to appreciate that as the economy digitizes, there are huge benefits, and those benefits then are not accessible to people without the ability to transact in that. I think a lot of the conversation about preference for cash that we've seen, if you dig into the data, what you really see is a rise in online purchases, particularly for that age category between 30 and 60. Now, whether that's consumer preference or choice, or whether that's just the changing nature of our economy because you can get these goods better, cheaper, faster, to be debated. But what does that mean for people that don't have the ability either to access that material online and to have the ability to make payment online in a convenient and low-cost fashion? If you risk an overdraft to buy something that's $5 cheaper online, it may end up costing you $30 more. And part of the problem why there's so many overdrafts is I don't know when my paycheck is cleared. If I get paid tomorrow on the 31st of the month, 10% of Americans get paid monthly, 38% get paid biweekly. A lot of people get paid tomorrow. Do not mistake direct deposit for immediate deposit. You are not certain if your payment is going to be available for your funds the very next day. And this makes life incredibly challenging for people in rural America and for people who are living paycheck to paycheck. And the sad reality is we had the tools to fix that 10, 15, 20 years ago. The United Kingdom went to real-time payments in 2008, Mexico in 2004. And so I think for your constituents in rural America, you're facing a double whammy. You have this access problem, and you have a means of payment problem. And particularly for those living paycheck to paycheck, and older people, for example, may be relying on Social Security, it becomes incredibly challenging for consumers to be empowered enough to be able to solve these problems and access all of these online benefits.
Well, thank you for that. I appreciate that. And as the state who has the 4th oldest population in the country, I appreciate your concern for them being able to get their Social Security that they need. Moving on, Mr. Ahmed, you mentioned in your opening statement that PayPal is committed to serving every American, or something to that regard. So bringing broadband access to all Iowans is a major priority for me. As a matter of fact, I'm on the WIPS Rural Broadband Task Force. We want to make this happen. I think it needs to be really a priority for all of the American economy, or we will leave parts of this country behind. So I want to ask you specifically, since you work for PayPal, and really asking all of the mobile payment community to get behind this priority so that everyone can actually benefit from what you have to offer. As a recipient of your product that I know works well, we need everybody to have access to this. My small business owners in Iowa need to be able to utilize services like yours. Are there steps you're able to take to help us spread the access more quickly than we're doing right now?
Well, I think we can be supportive, of course, of your efforts, and I think we can also add in kind of, our perspective on the benefits that access provides in terms of increased growth and increased payments. And I would also point out that, you highlight access as such a key issue, but it's also cost and kind of driving down the cost for individuals, in particular in rural areas, and making sure that, the data is not so expensive that, yes, you have access, but you can't actually use it. And so I think we can be supportive of your efforts and would love to kind of partner on that and figure out how we can be helpful.
Well, we will be in contact because we need your help. I yield back. Thank you.
The gentlelady yields. The chair now recognizes the ranking member emeritus of this committee. The gentleman from Arkansas, Mr. Hill, is now recognized for 5 minutes.
Thank you, Chairman Lynch. Great to be with you. Great to have a broad payments hearing today. Thank you for making those arrangements. Got a great discussion. I've enjoyed hearing everybody's presentation. Mr. Ahmed, I was interested in your testimony. 40 million users and 28% of PayPal's total volume is Venmo. I take it from looking at your, and I too, like my friend from Massachusetts, I have a regular Venmo user in my family. My question for you is, of those 40 million people, how many of those users have an account balance with Venmo or PayPal, meaning there's cash left in their name out on the system, would you guess?
I don't have the exact number, but happy to follow up in written. And
I'd be interested in that exact number and what the average balance is, because of course everybody knows those are not FDIC insured deposits, and it reminds me of the old American Express traveler's checks, you know, of the 60s, where you have this money that PayPal gets to use, but people may or may not know they have it. So if you'd follow up with me on it, I'd appreciate it. Also, I was pleased to read about your being involved in the Faster ID Alliance, and I assume, Ms. Ford, you're also involved in the Faster ID Alliance?
I am not personally. Some of our members are, yes.
Yeah. I think that's important because in this FinTech task force, we've talked about these foundational building blocks of a digital future. So authentication is fundamental to get away from name and password. And so if you could send me some follow-up information on that, who the members are and what's being done there, that would be of interest. I want to turn to tokenization, and you referenced that and also ask Ms. Ford first on that. This idea that, excuse me, banks and non-banks have a payment rail out there in the payment system. We have wire transfers, we have ACH, we have SWIFT, we have cash, obviously, we have MasterCard Direct. We have all these different methodologies, and my question is, can we have a approved regulatory payment rail that's blockchain-based, that's available to banks and non-banks equally, where someone could propose a blockchain effort, and what does that look like from a regulatory point of view? That rail, so it's not a debit rail, it's not a credit rail, it's a blockchain available digital rail. Whether there's a cryptocurrency involved or not, be neutral on that. What are your thoughts, Ms. Ford, on that?
I'm not sure how authorized I am to speak on that issue. I'm not an expert on that type of technology, but I would say that I don't think it would be a limitation of technology being, you know, able to support that rail. I think it would actually come down to whatever policy implications there are, and I think, you know, Christina has alluded to some of this as well, that I think, you know, there is an inconsistency in the way that, you know, blockchain or just distributed ledger is regulated today. It seems to be happening mainly at the state level, and so that kind of inconsistency with the regulatory environment might be one of the limitations that could exist.
Yeah, Mr. Ahmed, you want to comment on that?
I would just note that, you know, for the kind of core banking architecture, I think there would probably be some changes needed in terms of the Federal Reserve System. But for, you know, smaller valuation or smaller amount payments, I think you already are seeing some blockchain-based systems being created that enable the movement of money. So I think there are examples out there. We talked about XRP or others that kind of offer this.
Mr. Klein, I'm for 40 years in and out of the banking business, small banks and larger ones, and I couldn't agree more with your testimony about access to available funds and the timeliness of that. We thought we were going to get there in 2004, obviously, and this is a huge frustration to people, and it leads to, you know, higher overdraft usage because of that 2 or 3 day gap. I think we do have a financial literacy issue there too, and Dr. Foster and I have worked a lot on that. I mean, I think people don't know they can schedule their payments around their payday by just simply calling the 1-800 number and doing it. And so they're juggling when they could move everything, given that. But what should the Fed do about you suggested up to $5,000 be available if it's, I get complaints about this from my constituents.
So under the Expedited Funds Availability Act,
Yeah.
that's what requires the first $100, as you well know, to be made available immediately. The Federal Reserve has all the legal authority
To change that number.
change that number and to change the amount of time up to $5,000 for customers of more than 6 months.
Yep, thank you for
And-
that.
Yep.
We'll talk more about that. Yield back, Mr. Chairman.
Gentleman yields back. The chair now recognizes the gentleman from Ohio, Mr. Davidson, for 5 minutes.
I thank the chairman, and I thank our guests. Thanks for your expertise in this field. Safe to say we don't all agree on all the issues here, but I am encouraged by the shared consensus that privacy is such a foundational principle for sound payment systems. Data breaches and data arbitrage pose inherent and underappreciated risks to consumers, and we do need a new architecture to protect personally identifiable information, and Congress needs to set clear parameters on what data can be collected or transferred. We also need to preserve what has worked so well for so long with the U.S. dollar. Cash is an incredibly important tool, and the features of it are alluded to by Mr. French Hill when he was talking about a system that could work for banks and for individuals. The U.S. dollar, if I exchange it, I don't have to go to a bank. I can transfer it between any one person. It's recognized as legal tender throughout the United States. And I don't necessarily have to share all kinds of personally identifiable information when I get it. Some people hate that. But the reality is when you go to a bank, our system of laws requires the bank to know all sorts of things and, frankly, to spy on all their customers in order to continue to be permitted to operate. And they do that largely to keep us safe and to protect us from crimes and things like that. But there is this system of cash that's still permissible for peer-to-peer. So as we talked about blockchain, I don't think everyone would agree in terms of where we're at with blockchain or crypto-based assets, but I think it's largely a matter of whether it's understood or rightly understood, in my opinion, because there's a fear that there's all this abuse. There's been some fraud in the crypto space, and rather the solution isn't to just avoid that space altogether, it's the exact opposite. It's to provide regulatory certainty and legislative clarity that does not exist currently. Blockchain broadly protects personally identifiable information, and done correctly, it eliminates or can eliminate intermediaries, true distributed ledger technology. So how could we do this? It's not a partisan issue, as I said. I've got co-sponsors for legislation that include people who support Bernie Sanders and co-sponsors who support Donald Trump, co-sponsors from the North, South, East, and West, Republicans and Democrats. The real issue is whether we will confront the innovator's dilemma. Will we continue the broken status quo that protects incumbents at all costs, or will we embrace innovation that will inherently disrupt the current system? When confronted with this opportunity in the 1990s, Congress got it right and the internet flourished. Congress did not try to understand everything about the architecture of the internet, and clearly, anytime there's a hearing about the topic, Congress still does not understand everything about the internet. In fact, no one has yet envisioned all the use cases for the internet or internet technology. So how does all this relate to payments? Innovators in payment systems are flourishing, but unfortunately, they're often launching projects outside of the United States, not to avoid our regulations, but to find legislative clarity in places like Switzerland or Singapore. So will we unleash the power of our innovative economy? Will we provide legislative certainty where it is absent with bills like the Bipartisan Token Taxonomy Act? Will we finally address the foundational problem of privacy? And finally, will we allow all Americans to interact freely and privately without intermediaries that collect, monetize, and often compromise our data? They slow the payment system, charge fees, and do make banking less accessible to some people. So I thank you for talking about this. And Mr. Ahmed, perhaps as the bridge between the old economy and the new economy, what are your thoughts on the framework that I've laid out here?
Certainly, no, I completely understand the framework and understand the need for anonymity, and I think it's the cryptography aspect of cryptocurrencies or payment solutions that leverage the blockchain that really enables that, and I think you see that in varying degrees, as I mentioned with tokenization technology, reducing the amount of actors that have access to sensitive financial information. So I think it's certainly something that people demand. I think it's certainly something that there's technological fixes for, but as you also acknowledged, there are kind of real concerns from a government perspective about terrorist financing or money laundering, and figuring out a balance between those two and how to resolve those, I think, is the key question that you're raising.
Yeah, good points, and I think I'm encouraged by, things like the technology on a distributed ledger that lets you follow it. So you do have privacy, but you don't truly have secrecy. I mean, you have a much more transparent system with a distributed ledger than you have with cash. And so far, I haven't heard calls to eliminate cash, thankfully. My time's expired. Thank you all.
The gentleman yields back. The chair now recognizes the gentleman from Ohio, Mr. Gonzalez, for 5 minutes.
Thank you, Mr. Chairman, and thank you for our panel today. I, too, have thoroughly enjoyed this discussion. We kind of have a lot of different perspectives and opinions on this, which I think reflects, frankly, some of the challenges that we have legislatively. It's always seemed to me that with respect to fintech, we're not quite sure where we want to go. We think we kind of have a destination in mind, but how we get there is always different. Ms. Del Rio, I want to start with you. I just want to kind of try to summarize part of your testimony and just give me a yes or no as to whether you think I kind of got it. Saw a lot of claims that seem to be that fintech is primarily or more about jargon that ultimately is exclusionary in its application as opposed to providing real innovation that expands access. Is that a fair characterization?
Sort of.
Okay, can you clean it up for me?
Sure.
Yeah.
So again, it's not to malign innovation or technology. They're not intrinsically bad or good, and that's the point. I think that what my point is that there's been a lot of sort of, reifying of technology as the solution, and so is going to solve the problem of the unbanked and solve, inequality and all of these deeply entrenched problems that we've talked about today and that your committee is well aware of. And so I think that my point was to sort of, this is the Committee on FinTech, is to underscore that our experience and those of other advocates, community groups, financial institutions as well, that work with low-income people, with immigrants, with these marginalized communities, don't experience these benefits of fintech yet. And in fact, it's often the reverse, where they promise that this is a stepping stone to greater access and to a greater opportunity when it's not.
Gotcha.
It's reinforcing the segregation.
Thank you. So then I want to turn to Mr. Ahmed. Can you talk specifically about the work that you all have been able to do by being in the digital payment space, specifically with respect to expanding access to affordable credit for small businesses, minority businesses? I hear about this from folks in my district, frankly, that they love products like yours because now they have the ability to access credit in a way that they all otherwise would not have.
Certainly, thank you for the opportunity. So we have a product called PayPal Working Capital, and it leverages the merchant payments data that we secure. We partner with the bank and then offer a loan, and what we find is that 70% of these loans are going to the counties that lost 10 or more banks, as Ms. Del Rio mentioned, since the financial crisis. So kind of going and filling in that gap, we found that 32% of these loans go to women-owned businesses, whereas in traditional financial institutions, it's 16%. And actually in the US statistics, women-owned businesses are 32% of the economy. So it's the ability to offer that loan to the individual that needs it anywhere in the country very, very quickly in a secure manner and in a convenient manner that I think is really the distinctive part of the product.
And of course, it's because you have access to that proprietary data for those businesses, right? You can see dollars coming in and out, and that allows you to price credit more effectively.
Absolutely, yep.
Great. And so in your experience anyway, or at least with that product, the innovation has been working. It has been expanding opportunity, which completely mirrors the feedback that I get. And I'm sensitive to the comments of Ms. Del Rio. I think it's absolutely legitimate that we need to, as we're thinking through the regulatory environment, making sure that access is a central component of what we're doing, right? But I do think if we're in a world where we're going to try to stop all innovation kind of in advance because of a fear of something that may or may not happen, I think that's a dangerous place to be. And then with respect to, you also mentioned, Mr. Ahmed, we have 50 seconds, AML BSA compliance. As we transition, or potentially, hopefully transition to more of a blockchain system, that's one concern that everybody raises. Can you just provide your perspective on that? Is that a tech challenge? Is that a regulatory challenge? How can we be comfortable in that world?
I think, you know, as we heard, there are technological solutions to be able to track, you know, transactions even with cryptography, depending on the type of cryptography, and it's quite a prism and quite a range, depending on what the solution is that's being offered. And then there's a regulatory challenge of how do you actually, you know, go after the types of things that you're worried about, but ensure that legitimate transactions are getting through. So I think it's probably a little bit of both.
Great, thank you, and I yield back.
Gentleman yields back. The chair now recognizes the gentleman from New Jersey, Mr. Payne, for 5 minutes.
Thank you, Mr. Chairman, and let me thank you for allowing me to sit in today with the task force. And, you know, being a guest here and allowing the other members on the committee to go before me, your thunder kind of gets stolen. But I'd just like to associate myself with the comments Mr. Davison of Ohio made in terms of cash. For me, it's about choice, and I'll ask Ms. Del Rios and Mr. Klein, what happens to that segment of the country that does not come along with this move towards other currencies? What happens to the grandmother that just can't learn all of this rigmarole on the phone? What happens to the child that their dad gives them $1 to go get candy? I mean, what do you have to carry a card now, or say, here, son, here's a credit card. Go get yourself a lollipop. It's about choice, and that's when the issue is raised, is cash still king? I don't know if it's king or not, but in the United States of America, there should be a choice. And there are underserved, underbanked communities that are not going to ride this. I still, unfortunately, don't use PayPal because I kind of have not learned to use it yet. And I would consider myself fairly savvy, but there are just communities that I'm concerned about, that I represent, that are just not going to ride this change. And privacy issues. Cash is still only the one way that you have total privacy in this country. Wawa, the convenience store, was just hacked several days ago. 30 million people's information. 30 million Americans' information. Forget about Target several years ago. So cash still really is really American. It's the American way. A legal dollar, George Washington's face on the dollar. And we're talking about doing away with that. You're doing away with a segment of the country. The statistics are right behind you. 34% of African Americans use cash. That's a major segment of the country. So what do you say to making sure that there is a choice in this country? That's what this nation was built on, having a choice. Not that we aren't going down that road, but to not have a choice in the matter is my concern. Ms. Del Rios?
Yes, thank you. I appreciate your comments very much. I want to say that I've been doing this work since the mid-1990s, and at that point, I remember people were predicting the demise of cash, and there were going to be no more bank branches anywhere. Everything was digital and technology-based, and that hasn't borne out. So I appreciate your comments, and just want to note also that in New York City, our city council just last week passed a ban on cashless businesses for all the sort of reasons you outlined, the impact that would have, the racially exclusionary impact it would have on keeping people out of certain storefronts, which is just fundamentally problematic. When I started doing this work is when public benefits were starting to be transferred to electronic benefits cards. And at that point, our organization and many others raised some of the concerns that you're mentioning. How would that impact people who don't have easy access to bank branches or ATMs in order to access their food stamps? And what we've warned about and have seen bear out is that people end up paying huge amounts of their public benefits in fees to access, their cash benefits, or publicly subsidized benefits. They have to take buses to get, use their benefits cards and things like that. And so that's just one small example, but it bears out in many other ways. So I think we absolutely agree, and I think this panel agrees that cash shouldn't disappear, that people should should have their choice preserved and protected, and that stronger action by Congress to make sure that people have that they are protected no matter what choice they make. These are just fundamentally key things if we are going to build infrastructure that allows for greater options for people.
Well, thank you, and I see my time is up. I'll yield back.
The gentleman yields, and the chair now recognizes the gentleman from Wisconsin, Mr. Stile, who is recognized for 5 minutes.
Thank you very much. Thank you, Chairman, for holding today's hearing. I think we've heard a lot of discussion today that's focused on the idea that innovation and the adoption of mobile payment technology can lead to financial exclusion. There's people in this country who are unbanked and lack access to smartphones. But we should be working, I think, to ensure that the public policy creates an environment where everybody benefits from innovation that we are creating. I think there's an opportunity here to talk a little bit about how we can use this technology to improve financial inclusion. I look to Mr. Ahmed, and I think for us, I think it's important to step back maybe and just put a little bit of context to this. And so if I can, I dug up some numbers, Pew Research, 96% of Americans own a cell phone. 10 years ago, it was about 85%. Same study found that 81% of adults owned a smartphone. Back in 2011, that was about 35%. The numbers for smartphone ownership rates by white, black, and Hispanic adults, this study found was nearly identical, 82, 80, 79%, reasonably identical rates. And while lower income adults are less likely than those with higher incomes to own a smartphone, the overwhelming majority of respondents earning less than $50,000 per year did own a smartphone. And some interesting data, 71% of those earning less than $30,000 had a smartphone, 78% for those earning between $30,000 and $50,000. And I think we're seeing this trend not only in the United States, but globally. 60% of adults in Brazil, 52% in Mexico, 41% in Kenya have smartphones, and the numbers are continuing to rise at a very aggressive rate. And so given the adoption of smartphones and the near total market penetration, I think we should be having a conversation about how mobile payments can foster financial inclusion rather than simply identify the risks of financial exclusion. We should identify the risks, but I think we should spend some more time on how this can actually help us moving forward and how technology can actually help those that are unbanked. And so, Mr. Ahmed, if I can ask you, in your testimony, you mentioned that, I think, quote here, the most significant barrier to mobile payments for underbanked consumers is their poor compatibility with the way in which unbanked consumers often earn and use money, end quote. Can you elaborate on that comment just a bit?
Certainly. So if your employer...
There's a smartphone for us.
If your employer pays you in cash, and then if you're living in a community where most of the options available for you to get your groceries or to take transportation, if the common method of acceptance or the preferred method of acceptance is going to be cash, then it makes a lot of sense for you to be using cash. But I appreciate you highlighting the point about financial inclusion in the way that we're thinking about it at PayPal is really about financial health. Can we create value propositions using the full suite of financial services to say, actually, there's a better option here if the digital payment is accepted by the merchant, whether you're offering credit to the merchant as an incentive or lower cost, or on the consumer side. So that's really where we're trying to focus and to do it in partnership with a lot of the entities on the ground.
Thank you. And as we go back and look at the widespread adoption of smartphones and the continuing trend lines across the United States and across different demographic groups. Can you comment on how that is allowing PayPal to serve some of these individuals that were previously unbanked?
Certainly, no. We are riding a very strong trend in this space, in the mobile payments, in the mobile, access space, and we're seeing mobile payments grow as a result of that. So certainly a lot of the core focus of our company, whether it's in Venmo or in our core PayPal product, is to create better and more experiences using the mobile device for people to be able to use, again, everywhere they go.
I appreciate your comments. I appreciate your time here today. I do think, as we spend a lot of time today identifying some of the risks, I think it's important that we also identify a lot of the positives that some of these mobile payment technologies can assist those that are currently unbanked in our system. Thank you very much. I yield back.
Gentleman yields back, and the chair will now recognize the ranking member for some closing remarks. 5 minutes.
Thank you, Mr. Chair, and again, thank you for the committee for this interesting discussion. I really appreciate my colleague from Wisconsin, I think, pushing the reset button and getting us to refocus, because a lot of what I hear when we talk about technology reminds me of what humans have dealt with since the beginning of time. We fear what we don't know. And by acting before we really understand what we're dealing with, we have a tendency to drive innovation and, more importantly, the entrepreneurs responsible for it, the great science, everything else, out. We should lead when it comes to these technology advances. Frankly, I was listening to the comment when you said that we banned cashless businesses. That's actually kind of sad, because in the next follow-up was we need government to give us more solutions. If you think back to 2007, I believe we had roughly 9,000 community banks on Main Street across this country. We had roughly 9,000 credit unions like the one that you chair. A year later, the crash, we still had roughly, after the crash between 2008, 2010 or 11, we still had roughly 9,000 of each. And then Congress rushed in to help, like Congress did with the savings and loan crisis and every other crisis, because government's got to save us from ourselves. And ever since, it's accelerated the pressures on small community banks and credit unions to the extent that we now have roughly, I think, less than 6,000 of each, and we're losing more every day, rather than trying to create an environment where we're creating more Main Street banking opportunities. So the idea that government's going to solve it by banning it, and I just want to give you something, because I think it's funny when I hear from even one of my own colleagues that crypto is the preferred method of laundering money. Well, my colleague, Mr. Payne, just pointed out the only truly private thing left is cash. We can identify people on the internet. You can't necessarily identify somebody who's carrying around suitcases of cash, and I think the comment was El Chapo had $200 million in cash on his property. I had my guys check. I don't think he had any cryptocurrency, by the way. His son might have, but he didn't. I would suggest to anybody who's interested, again, because I think the rhetoric really is, this is Silk Road, this is dangerous, technology is going to disenfranchise because we don't learn it. And by the way, to my colleague who says, what about the grandmother who doesn't know, or the child? I agree with him. But I'm one of those people that when I go through the checkout line of the grocery store and they say, sir, the self-serve is open. No, I'm going to the person. I want to talk to somebody. The young people are going through. Besides, if I go through the self-serve, I want the employee discount because I'm doing the job, right? I should get the discount. But I think while we should be concerned always, and I respect and am very sensitive to the fact that we are all thinking, I hope in the same vein, we want people to have access. We want people to be empowered and to grow and be able to lift themselves up. We just look at it a little differently. I suggest, if you haven't, take a look at the book, The Age of Cryptocurrency. This book begins with a story of Afghani women who are typically excluded and shunned from partaking in finances. It's a cultural issue. These Afghani women were using Bitcoin to build up a financial livelihood and to store value that is solely theirs. This is the kind of empowerment that's not something that I think we should just be tossing aside, again, because we can't see all the things out on the horizon. We have to make sure we're very careful. And this institution in particular has to start moving a little quicker with the certainty questions that we talked about in the marketplace. Because at the end of the day, that is where we're going. And I think people need to be very clear. We can either help facilitate this technology advancement, or it's going to happen without us. And God forbid it happens somewhere else where we don't have any say. So again, thank you to the witnesses, and Mr. Chair, thank you very much for having this hearing today.
Absolutely. Thank you for your remarks as well. In closing, I just do want to point out the difficulty here that we face. And you know, I was in Somalia last week. We did a CODEL there to the Horn of Africa, and I'm keenly aware of the need within Somalia for a secure banking apparatus to help that country recover. And all of the big banks have left, right? And because of the threat of reputational damage due to the control of al-Shabaab and terrorist elements in that country. But you do see the need for you know, a value transfer system that is secure and that will allow that country to recover. So, you know, clearly there are some advantages to be had in a digital system that is secure. It's a very different circumstance, but I clearly see the benefits. But I also see, you know, the benefits that our regulatory system has secured. You know, back in most of our regulatory system on the financial side, the traditional system, has been created as a result of responses to calamities in this country, right? So we had 9,000 bank failures during the Depression. 9,000. Congress came up in coordination with the SEC and others and created the FDIC. So we have Federal Deposit Insurance Corporation, and now, you know, even though we had, you know, a major catastrophe in the recession in 2007, 2008, we didn't see all the banks closing down like we did before. So there are advantages to having those intermediaries. And so now I'm a bit concerned about the push for blockchain and a system that eliminates the intermediaries, right? It's peer-to-peer ledger. So, so we go around the Federal Reserve because it's peer-to-peer. We go around the SEC. We go around Treasury and FinCEN, the Financial Crimes Enforcement Network. We go around all these intermediaries that allow us to rebalance and correct some of the inequities. So it's a big challenge, but it's extremely interesting. It's you know, and I agree. We got to try to tackle this and get the best out of a system like that while protecting against the worst aspects of what some of this new untested technology might present. So I want to thank you all for the wonderful testimony. All of you brought your A game here today and really helped us work through some of these issues. They're extremely complicated, but we want to understand how this affects everyone, right? The banking industry has tended to gravitate toward the needs of the wealthy, right? I remember when I was an iron worker. I was an iron worker for 20 years, and I became union president. And we had accounts so that the men and women on the jobs could go cash their checks at the end of the workday. And I remember a big bank, still around, and told me as union president they didn't want to do business with my workers anymore because the amount of money they were making on their transactions didn't cover the cleaning of the rug because my guys and gals were coming in with muddy boots. So, you know, that type of elitist attitude that we want to take care of the rich folk and not the workers so much. And you know, that's where the money is on the high end of this spectrum. We have to be careful. We have to be careful that if we're designing a system that it is inclusive of everyone. And I think we can do it. I think we can accomplish the goals of, that have been articulated up here. We just got to be smarter about it. Part of it is the way we engineer this, and part of it is the way that we not only engineer the architecture, but also regulate it on behalf of the American people, because we are the only group that can really intercede on behalf of those people in our economic system and our legal system. So thank you very much for your testimony. As always, let me just read this closing, if I can find it. Members shall have 5 days. Okay. Without objection, the following letters will be submitted for the record. Letters from the American for Common Sense, CENTS, Coinstar, the Electronic Payments Coalition, NACA, the Electronic Transaction Association, the Money Services Business Association, the National Association of Convenience Stores, the National Association of Federally Insured Credit Unions, the Payment Card Industry, Security Standards Council, and Square. And the American Bankers Association, Javelin Advisors Services, and the Honorable Mr. Donald Payne, Jr. Thank you. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. And I respectfully request that our witnesses please respond as promptly as you are able. Without objections, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is now adjourned. Thank you.